So Michael Burry just released his 13F filings. He added a lot to Alibaba and JD.com, and we're going to get into it in this video. Can we glean anything from these significant ads? JD.com's earnings just came out last week, and we're going to talk about it. There was some good, there was some bad. It was kind of so-so. We got to get into the depths of this because remember, I own a lot of JD.com and Alibaba, and JD.com is still a significant portion of my holdings. It's still down like 20 to 30% in my portfolio. So we have to get into the earnings and what we're seeing for JD.com and see if JD.com still has future potential. Should we hold? Should we add? Should we sell? What are we doing? Guys, let's get into this video right now. But before we do, like it and subscribe to my channel. Click that like button, click that subscribe button right now. So if we look at Michael Burry's holdings, it's not a surprise that he added to JD.com and Alibaba. He added 100%, man, that's crazy. He added 233% to his JD.com holdings. Guys, this is not a surprise. Chinese companies are still super undervalued at this point, and it hasn't recovered yet. It's been 2 to 3 years and the Chinese economy has not recovered from these lows, so he still sees it as a huge undervaluation with Chinese companies. And we have to realize that the Chinese economy is going to pick back up very, very soon. Q1 for the Chinese economy was picking up slowly, but the demand for customer products hasn't been there. JD.com said in Q2 and Q3, we're going to see the pickup in consumer spending. That's an early sign for us if you own Chinese companies that it's going to pick up in Q2 for these Chinese companies like Alibaba, JD.com, like Tencent. He's also buying a lot of bank stocks because he sees the devaluation in the bank sector. We know how Michael Burry likes to choose his company and invest. It's strictly on valuation pretty much, and he's seeing a lot of undervaluation in these sectors. So we can look at Chinese companies and bank companies. Those are the most undervalued stocks in my opinion, and that's why I've been buying a lot of bank stocks and Chinese companies, because those two sectors are getting hit the hardest, and I think that's where you're going to see the potential returns into the future. Do what you want. That's not investment advice, but that's what I'm seeing in the market, and that's what a lot of people are seeing in the market, because even Warren Buffett came out and added to his position in Bank of America. We see Li Lu coming out and adding huge amounts to his Bank of America position as well. I'm probably going to do a separate video on that, but damn, that's showing you signs that the banking sector is very undervalued, and they're buying it only for one reason, because it is cheap at this point. JD.com stock price has been up almost 10% in the last 5 days, especially on this news that pretty much Michael Burry is buying the stock. But the earnings did come out and it went up 7%, but then it declined again right after. So you can see it spike up right here and then down really quickly 6% and then back up as people started seeing that Michael Burry and a lot of people are investing in these stocks. So what happened during the earnings? So JD.com releases earnings and revenue was only up 1% year over year, beats by 560 million. So it did beat, but guys, 1% with coming off this whole COVID restriction was kind of disappointed. I thought it was going to be up like 5 to 6%, but I guess the street had it way lower because they beat with only 1% revenue growth. Non-GAAP EBITDA increased by 56% year over year to 1.4 billion for the first quarter of 2023. And this is the main argument I have for JD.com going forward. Seeing increasing margins, you're actually looking at the cost structure and kind of reining all the expenses back in. They're looking at more profitability. They're getting out of all the markets that they are not good at, like Southeast Asia. They're kind of focusing on China, and I really love that because they're going to bring up their margins. They're going to focus on profitability. They want economies of scale to be even larger. So that's what I love about JD.com's culture and how they're moving forward. So I can still see this as a long-term potential hold because of what they're doing and how they're refocusing their business, and I really love that. So I'm very disappointed on the revenue growth. It wasn't there, but overall the earnings was amazing. We're gonna go slide by slide with this new presentation that they gave. It's always good to go back and look at the overall picture of JD.com because since 2017 to 2022, CAGR of net revenue was up 24%, which is good and solid. So are we gonna see that going forward? I would probably say no. I think it's going to be more of the 5 to 10% range. So year over year, again, net revenue up 1%. Breakdown of net revenue, guys. Product revenue is down 4%. So that's like very lackluster. Net service revenue up 34%, which is amazing. And that's how we're seeing kind of JD.com develop. JD.com is trying to get more third-party merchants on their site. So that's why we're seeing marketplace and marketing revenue up 8%. We're hoping that more people start selling on the JD.com platform, and that's going to increase the market spend. Plus, that's going to drive up margins because that's more margin efficient compared to their 1PF business. And then we have logistics and other services up 61%. So that's the real moat of JD.com. It's logistics services, man. They reach everywhere in the Chinese economy, and they're looking to be more efficient in that sector. We can see margins up 4.6%, 101 BPSs for year over year, which is pretty amazing. And that's going to kind of increase over time. We see the cash flow kind of down, but they kind of talked about how like the cycle and accounts receivable. So that was very understandable, and they're predicting that to go up for Q2 to Q3, Q4. So we can see a bounce back in that sector. Now we're gonna go over to the earnings transcript, the things that I like the most about what the CEO said. And guys, the CEO is retiring, he's getting out of the business. So that's kind of a red flag for me. Sandy, the CFO, is taking position of the CEO role now. So let's see how that goes. She's been in the company for many years, so I'm hoping that transition is seamless, but that's kind of a red flag. So we're gonna see how that pans out. We're gonna keep an eye on that. And here is where the moat comes in. We are also leverage our supply chain advantages to realize economies of scale and pass on those benefits to consumers. Does that ring a bell? Kind of like Amazon. Therefore, JD's ability to offer everyday low prices based on our focus on everyday low costs. We will drive several user experience changes this year by making adjustments on marketing and strategies, guiding users to embrace everyday low price concept instead of stocking up goods only at promotion. Thus, we will see the share of everyday sales increase this year, which is in line with our goal of everyday low price returning to assets of retail. This is where I love the company, as they're going to provide a lot of cost benefits to the consumers. This is where I see JD's moat expanding. So I love the long-term growth potential for JD.com, and that's why I'm not really worried about the stock price at this point. Even though it's down like holy 50-60%, whatever it is, I still see the long-term growth potential for JD.com. Tell me what you think about everything. Like and subscribe to my channel.